Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, March 22nd, 2012 is sponsored by Realtik. All right, let's get right into it, folks. Markets are trending lower today. Nice little sell-off with the SPY down $1.07 on the day. That mirrors the S&P 500, which is currently down over 10 points. NASDAQ down 14, and the Dow Jones Industrial Average down 81 on the day. So basically a half to 0.75% drop across the board. And again, this is one of the bigger drops we've seen in all of 2012. And ultimately, the reason for this drop is because there's a shift coming, as we've talked about in previous videos, based on some key factors, which it's hard for me to reveal in this market, but something we called about a week ago with a perfect rounded top. It came to fruition. It is continuing to come to fruition and play out. For members that, again, followed us and accumulated, we're starting to see the rewards and benefits of positioning ourselves appropriately. Now, if you were not involved, if you're new watching these videos, 7-day free trial is the only words I have for you here at InTheMoneyStocks.com. 7-day free trial to the Research Center, which is more for swing traders and investors, and 7-day free trial to the intraday stock chat, which again is geared more towards day traders. All right, looking at this market again, guys, a beautiful gap down today, what I call a river theory, and this is more proprietary stuff, so I cannot really go over it too much, but needless to say, this pivot low from the 14th of March is extremely important. We gapped below it, retested it, could not break through. Market sold off to new lows, bounced back on light midday volume, and are now starting to trend down in the afternoon session as we approach 2:30 p.m. Eastern Time. Volume is beginning to uptick a little bit towards this session, and again, that's going to be interesting to see how the volume is as we enter the last hour of the trading day. Do we see that market starting to see a little bit more selling, possibly back to the lows of the day? All right, now again, what's the cause here? I mean, what's the culprit? Well, ultimately, there's a change in emotional behavior, which coincides with something that our premium members, our elite members here at InTheMoneyStocks.com know about, and that's all I'll say on that matter. But bottom line is the China PMI last night came out very poor. That kind of threw the markets for a loop as it was weaker than expected. And the key is we've had weak China data now for months. But 2 months ago, 1 month ago, a couple weeks ago, it didn't matter. But as we rotate and the psychological nature of this market shifts, it begins to mean something again. And I think that's the bottom line for those of you that are trying to figure out exactly what's going on. For those of you that are watching this and that are actually members, you know exactly what I'm talking about since I covered it in the technical analysis videos, which are part of the Research Center, and you can get those again if you take that 7-day free trial. But bottom line is, this is exactly what we've been talking about happening, and it is perfectly happening according to plan as the markets begin to move lower. And again, you're going to have some big bounces along the way. We know that because there's a bullish sentiment in the market, especially amongst the retail buyers, the retail amateurs out there, where they're buying every dip. They've been programmed by the media, by the analysts out there, by the market itself going up so consistently that they just missed out. Therefore, every pullback they have to buy. And that's exactly what the institutions wanted, and that's why you got the rounded top recently, is because of distribution. Distribution creates a rounded top in a major bull market. And again, notice right here. All right, here you had that 200 update on the JP Morgan buyback, and then since then you have a beautiful rounded top, and the market's again coming in now a little bit steeper after the rounded top right here. And rounded top is institutions selling, and essentially what it's called distribution to the retail and buyer, and again that's what's happening right here. And now again there's a little bit more selling as a little negativity comes out, and there's less retail buyers. As retail enters the market, there's less and less of them to buy. The retail amateur is always the last one in the market. So once they're done buying, there's nothing left. And then ultimately what you will see is the market ultimately starts to come down a little bit faster and faster. All right, so that's what we have going on right now, folks. Let's take a look at what are some other keys to this market today. Goldman Sachs, JP Morgan financials are neutral to lower, so that's keeping a little bit of pressure. In addition, Apple, which had a nice dump yesterday, has moved back after going positive briefly and hovering right around gap fill. And by the way, look at gap fill right here. I mean, was this an amazing level or what? The close from yesterday, and you can see you pierced it multiple times, never could really close above that level. And Apple, again, has turned lower here. I'd like to see a retest of that 200, and ultimately a close below should really send this thing further south in the coming days. All right, so again, Apple, nice little down day. It's only down $3, but again, considering the strength we've seen in Apple, you have to marvel at that. And I just want to point something out, guys. notice over the last week how many analysts came out with price targets, raising their price targets and going bullish on Apple, right around the 600 level, and saying, oh, it's going to go to 750 and so forth. That's a top call. Yesterday, and you have to know how to read this stuff. If you're believing what institutions and analysts say, then you should go smoke the you-know-what, because you're going to be always on the wrong side and missing things. You have to understand what this is doing. Goldman Sachs comes out yesterday and says it's the best time in a generation to be long stocks and out of bonds. Insane, folks. Absolutely insane. Now, I'm not saying the markets can't go up at some point in the future, but to see a rally on the chart of the SPY and the S&P, essentially, from the lows down here in October, where we're now up 30% almost, about 30% in fact, to say that now is the time to go long, I mean, to me that just screams, we want all the little guys to buy right now so we can sell into them. I mean, it's a classic pump and dump, in my opinion. I mean, that's just an institutional legal way of pumping and dumping. In any case, that's what we have going on here. Again, market's down a little bit today. We'll see where this thing ends today. I am very curious to see where we close. Ultimately, the 139.50 is a big level, and that'll be something that we may retest today if the markets get any sort of pop. Will we take it out? Will we close above it? If we close above it, you could float back up a little bit. If we stay below it, then I do think further downside is in order. Okay, looking at a couple other stocks today, let's take a look at what's going on. Caterpillar is just getting absolutely crushed, folks. Good support right down here, and this is, look at the low of the day today on Caterpillar, matching perfectly with the close from a couple weeks ago. And again, I am short Caterpillar. I have been short Caterpillar since 116.05. That's correct, folks. I am $10 in the money on this short, almost 10%, because I have proprietary levels, master levels, and I utilize them. All right, we've seen other good falls today. We've seen continued weakness in the market as it comes down. I have some short ETFs that are doing very, very well today, as well as some short stocks that are just rocking and rolling. Okay? All right, going back to a couple other stocks, Amazon, AMZN, is up 63 cents. You might say, well, how come Amazon's up? And the answer is very simple. Triangular pattern, perfectly called. This is something I've talked about to you guys for a long, long time. And the triangular pattern here, in fact, let me just draw it a little bit more accurately. If we zoom out a little bit, I think we can actually get this line right here. And look at that. So you have a trend line right there that connects in from this little pivot over here, and you broke out, and now you're consolidating, and as long as you're above this area, it's a breakout, and you could go higher. And that's why Amazon's able to be stronger today when the market's so weak, is ultimately because it's in breakout territory. Now, breakout only means probably a move up to this 200 moving average, but nonetheless, I mean, you just have to follow the charts. The charts will tell you everything. And we will teach you how to read the charts and give you everything you need to master the markets and make every right move, whether the market's going up or down. We don't care. I'm neither bull nor bear. I just position myself on the correct side of the market constantly. And again, it works for stocks, ETFs, markets, currencies, commodities. I don't care. You can trade anything using this methodology. So in any case, folks, come join us here. 7-day free trial to the Research Center. 7-day free trial to the Intraday Stock Chat. And this is at inthemoneystocks.com. One more time, it's inthemoneystocks.com. Take care, guys. I got to get back to making money here with my members. I hope to have you with us soon making money right alongside. Take care.